Qantas, because shares are continuing to rise, so up by about 3% in the past few days. It has had a very strong performance with half-yearly results most recently. We've got news as well that it will boost its international network with extra flights, more aircraft, new routes as it restores capacity in line with strong travel demand and the broader recovery of the aviation industry. So yeah, it's looking to put more bums on seats. And we're told by a lot of these travel companies that have upgraded, Hello World comes to mind just recently, that people are just dying to get out and that they're dying to sort of get out and still fly internationally. So Qantas is the stock of the day. Let's talk to our expert guests about Qantas. Look, guys, what do you think, Jun Bei, when it comes to Qantas? Because oil prices are coming down as well. That's got to be a positive.
Look, it is. However, I do think this company has made a lot of money in the last 18 months. Due to capacity constraint, the ticket price went through the roof. This company has made a lot of profit, way above what it's supposed to be making compared to the pre-COVID level. Now, what's coming in the next 12 months or next 18 months or even next few years, they need to refresh their fleet. They need to refresh their flights. They need to spend a lot of capital expenditure on those new flights. At the same time, they probably need to improve, staff availability, improve some of the issues they had in the last 12 months. So, look, to me, Qantas has done incredibly well for investors. I'll be taking profit. I'll be taking, and then next, and then waiting perhaps in 12 months, the share price will be a whole lot lower. And by then, perhaps you can reposition again.
Okay, so take some profits from Qantas if you've been in there. So we're calling that a sell, Jun Bei. What do you think, Daniel? There is a new CEO who will be taking over in November. Does she have a tough job ahead of her?
Yeah, probably one of the toughest jobs, I'd say, heading into that company at this point in time. And this comes back to my point about stock picking. I think everything Jun Bei just said hit the nail on the head. So we're coming out of an enormous period of profitability. I think ticket prices have certainly been coming down. So we know that's a major earnings leverage factor for them. One that we'd be concerned about, the factor that's reversing. And furthermore, the reinvestment required over the next probably 3, 4, 5 years is going to be tough to balance. So from our perspective, the best days are probably just behind it, if not, within the next 6 months, that will be coming to an end. So we'd be happy to rotate, but we still think travel is a really great sector to be across. So some of those other names, which are probably heading into a period of continued earnings and cash flow growth, such as a Flight Centre or even a corporate travel, would be much more happy to rotate into one of those.
Okay, interesting. Were you going to say? Yeah.
I just want to add a point. I absolutely agree. I think, you want to buy travel agents because travel agents will continue to benefit from this, consumer dying to travel, as well as the inbound, the Asian, tourists coming into Australia. You want to be part of that, whole tourism. Qantas, on the other hand, should be the funding source. And even though next week, potentially, Qantas will have an earnings update and it will still be very positive. But if the share price follows what happens to the North American airlines post those announcements, share price actually won't move, if not going down. So definitely funding out of Qantas into the other travel agents.
So the Hello Worlds, the Flight Centres of the world.
Webjet.
Okay, so Webjet would be the preferred pick.